Viewers living on this channel is for educational purposes only. It is not intended as financial advice. It's Teaching Tech Tuesday. Let's talk about an underappreciated segment of knowledge, nugget, kernel that is useful when understanding markets, and it sort of gets baked into your trading style once you know what you're doing a little bit. But in the early stages, especially, at least for me, trying to understand time frames in markets and why that matters and which time frame matters, and should I trade futures on the 4 hour? Should I trade Forex on the 4 hour? What does a day in crypto even mean? So you sort of have to get to a point where you understand basics of markets and why timeframes are what they are. You know, for the most part, traditionally, markets were 9 to 5 or some variation thereof. Very rarely have we ever had 24/7 markets outside of crypto. So that's definitely something new. And you kind of have to have an arbitrary cutoff for days. I haven't seen time frame analysis using a different cutoff for a day. For example, if you're trading on, EST, New York time zone, I've lived in EST all my life. This makes sense for me. I'm fortunate enough that it's basically the predominant time frame of the world effectively. So the clock kind of runs in trading terms on the US Eastern time cycle. But I haven't seen, alternative candlesticks, for example, on different time points. But anyway, so you have to know that typically the market is in the ballpark of Eastern Standard as the dominant time zone, at least for data. That isn't necessarily when we're seeing trading activity or seasonality within the day. We'll see trading activity for the US, we'll see trading activity for Europe and Asia. It'll rotate, right? That's sort of different than what I'm talking about here, but also good to know. Those are probably more commonly referred to as kill zones or high activity periods in the market based on who's awake at any given time around the world, right? When people go to work, when are people around? So that's maybe some pre-information that people don't really talk about or think about necessarily, and as a background. But if you're using TradingView or Kraken Pro, you've got timeframes that you can set whatever you want, right? But for the most part, the market is paying attention to Eastern time zone waking hours, right? That's when Wall Street's awake, New York's awake, that sort of thing. So as far as trading goes, my personal preference is always going to be looking at the daily and the weekly. That's usually when I make the trading decisions based on that information. Very rarely will I go down to like the 4 hour. I'll poke around, I'll look, right? I might zoom way in, using this telescope microscope analogy. You'll zoom way in on this group of cells in the petri dish or this grouping of stars in the sky, but you need to know your bearings and you need to know what the general attitude of the market is on a super, super high time frame level. And if there isn't a super high time frame, you're already in trouble because you're asking for additional risk. You're taking on that risk that this is something newly listed, when we're talking about alts, for example, and there's not enough trading data. This is newly listed. Who knows, right? So you always have to be careful with stuff like that. I bring that up because people looking for information about timeframes are typically people using 15-minute timeframes, 5-minute timeframes. Are there people who are successful trading those timeframes? Absolutely. Do I personally think that if you're on those timeframes, you're basically gambling more than you are trading or investing? Absolutely. Okay. That doesn't mean you can't be successful in trading and have appropriate risk management and understanding and appetite of what's going on. But because of the volatility in crypto, in my opinion, if you're trading based around extremely low timeframes, you will very easily get blown out more often than not on some random market event, right? Some random news. So it's always good to adjust accordingly to find a market viewpoint. Now, if the market speeds up, you do have to bring your time frame down a little bit just to see what's going on, right? If we have a single day where there's 50% move in something, you're going to want to zoom in. Like we had that ETF news, we had a 5% something candle in a matter of minutes. Naturally, people are going to zoom in and look at that throughout the day. That's okay, but am I making trading decisions off of that myself? No, but it's always an option. For me, higher timeframes always win. When in doubt, zoom out. You always want to see what the dominant viewpoint is. Generally, what is the speed of the market? I'll go over examples here. But a good baseline is always the daily and weekly. We're kind of accustomed to 365 days a year, a working day, holidays, 9 to 5, right? Most of the world is not on this 24/7 cycle. So it's just natural human behavior to be focused on sunrise, sunset. daily open, daily close. And ultimately, if you're trading, which time frame is important for price action? There are times when the weekly chart has levels, the daily chart has levels. In legacy land, the monthly chart will have levels, right? It's important to know that. And some of that is time frame agnostic at the end of the day, right? You'll get to a point where it doesn't matter which time frame, you'll be able to point this stuff out. It may be easier to see on higher time frames. You know, if we're looking at link ranging for 18 months, it's going to be harder to see on the 4-hour, and you may miss certain levels, right? You don't know that we've been ranging for 18 months, right? So you usually want to start on high time frames and then dial it down, because then you can understand what is the market viewpoint generally over time, and that'll help inform the direction of trend, the strength of trend, the speed of the trend. And then you'll get to the point where you're like, okay, what is my expected trade duration? I'll go over an example on the Bitcoin chart. And all of this broadly affects risk management, right? Where's my stops? What is my take profit level? And a lot of people just love the low time frames because they think, I'm a trader, I got to take trades, I got to make all these trades. I can do that on the lower time frames. I get more signals, right? Generally, those aren't necessarily profitable signals, but you may get more signals on lower time frames, right? My whole essence of being as a trader is to zoom out. That's why I double the cloud. That's why I double a lot of the time frames. That's why I double a lot of the settings, right? I'm always zooming out. I'm always looking for pulling out the signal relative to the noise. For me, it's just easier. I find I'm a more profitable trader, right? But for some people, they like the lower time frames. That's okay. There's a place for that. Personally, not for me. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. And I think as most people are aware, probably on Kraken, you'll see the timeframes here with the dropdown. On certain other websites, you'll see even more options for timeframes. I'm not going to talk about this, but there are weird people. Okay, there are weird people who use like the 12-minute time frame or something because they think, you know, they're getting ahead of reading something in the market that people are waiting for on the 15-minute or something, some weird offshoot time frame. Sure, you know, I don't have a lot of experience doing that, but some of this is just feel and knowing where you can get the best advantages. So if trading some random time frame that no one ever looks at is profitable for you, you know, what does it matter what I think? But I just like to stick to the daily, which you got to be careful with daylight savings as well. You know, this is a whole hyper-specific conversation of where you're at in the world, what you're looking at. Like, that doesn't really bother me. You know, generally, I just want to look at what is, you know, daily open, daily close. I don't really care the exact specific time, but the market will know. The market will move on, you know, futures open on the weekend or US open at 9:30, stuff like that, right? So you need to be aware of when those time points are. And generally, it's best, I've found, to just stick with the daily for most of the analysis. So we look at Bitcoin, for example, we zoom way out. We've got a decade of data and then some now. Thankfully, we've pulled together whatever the early exchange data used to be. Honestly, not too meaningful. Most people, when looking at Bitcoin these days, will go back to like 2013. That's really, you know, when we got put on the map with Mt. Gox and China and all the attention that that brought. And most of the longer term narratives are based on this idea that over time, along with the halving cycle, we have seen a chart that has gone up and to the right. Something else to mention when looking at these charts, I'm always using log scale. I'm never using linear. When you're going out this far, using linear doesn't tell you anything, right? You can't decipher anything here. You don't know what's going on. So it's one of the reasons to use log scale. So this high time frame viewpoint has really helped people from a narrative perspective on Bitcoin. That's not going to exist for all crypto, but I would zoom out on whatever your favorite coin is to whatever time frame makes sense and ask yourself, you know, are we just here for each cycle or are we here for the long term, right? Some of these coins, especially in DeFi, have failed to hold levels, you know, layer ones have failed to hold levels over time. So it's good to know where that is. Does that exist, right? Doesn't say you can't trade it, but it's good to know. The next part on a higher time frame would be applying some extremely basic technical analysis. So we're talking about a 20-week moving average, okay? It could be the 26-week, it could be, it doesn't matter. Pick some 30-week, right? The numbers don't matter. What matters is, can I find something there? Is there any there, right? Is there any signal to noise? Is there a trend? Is there a level that the market seems to pay attention to historically on backtesting? For Bitcoin, for ETH, certainly it's the 20-week moving average. So when I'm establishing a viewpoint on any lower time frame, I'm asking myself, okay, what does the 20-week say? Because historically, that has been extremely important for trend. So instead of looking at the weekly, you'll see me put the 20-week moving average on the daily chart, right? So that's what, the 140-day moving average or something, right? You'll see me put the 200-week moving average on the chart, which is the 1400 period moving average. So I think it's important to establish those viewpoints on the higher time frames if the market allows for that. Because once you're aware that, oh, we're above certain levels or below certain levels, you know, again, the strength of trend, direction of trend, speed of trend, right? If you're looking at gold, if you're looking at rates, if you're looking at something in legacy that's super, super slow, silver that's taken a decade or more to do anything, right? I'm going to adjust my size accordingly. I'm going to adjust my expectations of the trade setup accordingly, right? I might set alerts differently. I'm not just going to assume that, oh, I trade crypto, crypto's 24/7, crypto moves super quick, I should expect that move this weekend. No, these things take time, right? Crypto's a unique animal that, again, it's 24/7, it's fast, low liquidity, we tend to see moves extremely quickly. So it's just important to know the time frame of the asset you're trading that generally has the action, right? Where's the price action? So once you've established your highest time frame viewpoint that makes sense, right? Then I like to go to the daily and adjust accordingly. So if I know we're at an important level on the weekly, that's clearly a level that's worth paying attention to, regardless of the time frame you're trading, right? If you're trading on the 5-minute, I still care about where's the 20-week moving average. The trend is your friend until the end, and the trend will normally act as a tailwind for you. And if you're contra trend trading, right, you're probably going to be on the wrong side of that. If you're shorting NVIDIA all the way up, you're probably going to be on the wrong side of that. If you're longing TLT all the way down, you're probably going to be on the wrong side of that until the trend flips. And that's okay. You need to be okay with, losing money and understanding where you can lose money and where this can turn around and what is, again, the strength of the trend, the speed, etc. But it certainly helps to know and be comfortable with what is the time frame that's telling you something makes sense, right? We had, again, this massive spike on ETF news this week, fake ETF news, right? Got above 28, didn't hold 28. Broadly, we're in this awkward stage where we're trying to make a real deal trend reversal. Previously we kind of had this bear market bounce or mean reversion trade, down the worst, up the most, basically in 2023. The next steps is normalizing the 20s and potentially reversing, right? And that's certainly based on the weekly time frame, which historically for Bitcoin has had the strongest moves, has had the best trade setups, has had the easiest trade setups, okay? Like, why am I worried about that in hourly? Who knows what happens on the hourly? Who knows? I don't really care, right? If I'm watching a specific level, again, this is kind of time frame agnostic a little bit, on a certain moving average, that's all that matters to me. I don't care about what happens on the hourly. I don't care that we went up to 30 and back down to 28. I care that we're on a weekly level holding inside the cloud, that we're above 28 at the end of the week this week. But I'm not going to go down to the 4-hour and start shorting because I see something, right? Most of the time. That's just not who I am. So establish those high time frame views, and you have to know where's the market moving? Is it moving based on the hourly? Is it moving based on the monthly? Is it just super slow? ETH BTC is a great example. Whatever your opinion is of the chart doesn't really matter, but for me, it has been a slow grind lower. So it makes the most sense to me to watch it on the weekly. I would never want to watch this on the daily because all it's been is chop for almost 3 years. Almost 3 years of chop. Now that's chop to me, but that isn't to say it's not tradable, because again, depending on size and leverage and exchange, right? Some of this is tradable for people. I get that completely. For my trading style, I like the big stuff, right? Give me the big kahuna, the tomahawk steak, okay? I'm not here for the side salad, that is the daily on ETH BTC. I'm looking for big moves, big levels. Everything's better in Texas on the weekly chart, okay? And this does look increasingly bearish based on the weekly chart. Gold, great example as the other side of the spectrum relative to crypto. Gold might have this multi-year range, right? From 2020 to present. But it also has, going back a decade, this chart pattern that people are watching. They're watching this cup and handle. Just as they watched this inverted head and shoulders pattern at the bottom from 2013 to 2019, right? If we're in the middle of a pattern or if we're waiting for a level, do I really care about anything else until that level is hit? I don't. Can you trade this in the meantime? Sure you can, right? There are plenty of daily charts on some head and shoulders. There's some reversals, right? There's all sorts of stuff you can do. But what you really don't want to miss are the high time frame setups. Those typically have the most strength. They're violent. If you're on the right side, extremely profitable. If you're on the wrong side, probably going to get liquidated. So again, you need to get comfortable with understanding what's going on the higher time frames. Rates is another perfect example. This is the 10-year. For the past 35 years, it's been down only on rates, okay? Some people still have the mindset, based on the past 35 years, that rates are going to continue to move down, that there's going to be a headwind here. And that is simply not the case based on technical analysis. We're in a new paradigm, right? That isn't to say we're going to go to infinity on rates, but it's to say, look, yields are bullish, prices are not. And there's people stuck in this mind trap of the previous time period where they just assume rates are going to come back down. Because I think at the end of the day, they don't understand both the fundamentals and the technicals here on high time frames that are saying, look, it's a new day, baby. Rates are going higher, whether you like it or not, right? Another thing I like to do on alts is to move the time frames around a lot towards the higher end. Here's a great example where you'll see charts like this all over the place. Name a coin, right? Extremely noisy. This is basically the singled settings of the cloud or my settings on the 12-hour. Based on what I'm looking for breakouts, I would much rather have fewer trades, higher confidence, than more trades that just sort of kind of sputter out, right? So you can already see this 2022 period, we've held below the cloud this entire time. This is Solana, right? It doesn't really matter what it is, but it's Solana. So before 2023, the daily was actually an extremely appropriate time frame to assess the trend. Since 2023, it's been extremely sideways, noisy chop. Does the daily help you? Not really. Does the 2-day help you? Kind of, right? It's kind of telling you we are getting above certain resistance levels on the cloud. But if we zoom way out, it's not quite the weekly. Solana doesn't have quite that much data to look at that. But looking at the 3-day, to me, that's when you're taking the eye exam, right? You're sitting in the chair, you're adjusting your prescription, whatever it is. For those of you who don't wear glasses, just bear with me. But this is where things start to come into focus because you're like, oh, wait, duh, right? We're waiting for this 26 level pretty clearly. Now you don't need the cloud for that, but moving up and down the time frame helps smooth out what you're looking at, obviously, right? So I would encourage everybody to go up the time frames. Link's another great example, right? Just complete an absolute mess. And for crypto, it's unusual to be this flat for this long. But on the 3-day, despite the fact that we're in this range, it does start to become a little bit more clear. Now, I don't see a lot of people looking at the 3-day or the weekly on Link, okay? They're kind of focused on the range or they're focused on lower time frames. But I care about the bigger moves to the upside. And then lastly, if you're looking at some altcoin that doesn't have a lot of trading data, you can always go to the 30-minute, right? There's nothing wrong with that. The cloud works, moving averages will work, all the trading concepts will be the same. But your risk and your size needs to be adjusted. Otherwise, you're just getting it blown out of the water on some random nonsense tweet or some random on-chain movement, right? You're just exposing yourself to so much random risk when you're on lower time frames for crypto because of the volatility, in my opinion. So yes, you can look for the same things you look for, chart patterns, cloud stuff. But if you're losing a lot of trades and you're on a low time frame, just double it. Double the time frame, right? If you're on the daily and you keep losing, double all your settings. See what happens, right? See if things become clearer. See if there's more signal to noise. See if you start making profitable trades. If you slow things down by going up the time frames, I think it'll help give you a clearer picture of what's going on. And ideally, not trading advice, obviously, but make you a better trader. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.